I'm just going to run through price action from yesterday, Thursday session, London. Wasn't much in London, I was just observing. Was a trade in New York, but I don't trade New York, and being in Thailand, it's quite late here, like 10:30 or something. I don't want to be on the charts at that time, but I'm going to run through the trade. I backtested it this morning after seeing that we got the reaction from the demand I had there. So yeah, let's see the 4-hour story. Obviously we have this nice liquidity sweep here, but there was no break of structure for me. I saw this as a liquidity grab of these highs, so no real footprint and tension showing, you know, a body closure to the upside for me to then want to trade from this demand. And we know in theory, if it fails to do its job, say, you know, cause a nice break of structure, this has a high probability of being weak and may get run. Not 100% of the time, but this is our understanding of the price action and weak and high lows when they don't do their job. So yeah, I wasn't really looking to trade from that from my 4-hour story, but the 15-minute made a little bit more sense, showing a bit more. So reasons I had this marked up, because we have the supply and demand interaction and we get a nice sweep of liquidity here, and this is where the volume of buyers come in and we get a nice bullish move. So I just had this marked up to see what kind of reaction we were going to get when price action then hit this demand. And you know, we got a nice reaction here, a nice engulfing candle, and this high that put in the low is now broken, and then we have another break of structure here. So then this is the new higher low. This price going to come in, make our new higher low to make our new higher high. Just trying to follow price. Obviously this never happened during London, but it happened during New York. And for me, there was no, it's happened after my trading was, I believe, anyway, before, just when I was coming to the charts, but there was no entry anyway. So it was just an observation for me yesterday, and I don't believe I've traded this week, just been following price. But there was a nice long during New York if you trade New York. So again, the high that puts in the low is broken, so we're looking to try and catch the new higher low that's going to be made if price is to continue bullish, to try and follow price to the higher high. So let's go, and I just want to show you something. So if you only trade New York, for example, London, for example, same as me, and you come to your charts the next day and you see this, and it's no, you know, you've been following price, and obviously you don't trade the session, so you can't enter the trade. I won't jump to the 1 minute to see if there's anything in here. I will cut price back, and I will then, when price comes in, I will just trade my edge and see if there's an entry, rather than going to the 1 minute and seeing it in hindsight. But yeah, continue with this. This is nice, also liquidity to take on entry. So let's go, yeah. Nice candle to see. Buyers can be maybe coming into the market. There we go, nice engulfing candle on the higher low. We're going to get bullish price action. The high that put in the low has now been taken. We're going to, exactly the same on the 15 minute, we're going to now try and catch the 1 minute higher low to take the higher high, you know, but we're going to get it on the 1 minute before we get it on the 15 minute. So, and I want to show you something after price plays out, why I'm choosing this candle, because I choose a different candle for my entries, but I'll go through it, because it's really important to get yourself in and out of the trades. I want to cover the lows, so I'm going to go 5. And you know, you can obviously just do your 1 to 5s as I do, or with this one, if you have it in you to if this is a low here, this is a high, we're catching a higher low, we can take it to the new higher high. And on the video a couple of days ago, I said about, you know, the way price looked, it wasn't really much of like too much intention shown bullish. However, on this example, there is a lot of signs saying it's bullish, but you can wait. If this is, you know, the higher low, the higher high, and demand is now in control, it should get respected here, and a lot of the time you are going to get your break of structure and then come back in to then make a new higher low before price continues. Of course, some of the times, like a couple of days ago, it come in, tapped demand, and then it was off. But a lot of the time, also price, you know, does move in the higher highs, higher lows scenario. So you can wait for the second one, but obviously you're going to miss some moves also. Again, the break of structure, the new higher high, we're going to come in and make our higher low. Obviously you'd want to take it from this range. Personally, I would take it from the doji candle. So if you didn't take that trade, then you're going to take this one. And you also get within here 1 minute market shift, so you could also have traded it from here. However, it's very valid to be trading from here because you have a low, higher high, higher low, higher high, so you want to catch a higher low and then let price do its thing. Very clean, to be honest. So yeah, there's a couple of opportunities there, but you can see here, oh yeah, it's like 11 o'clock here for me. I don't want to be trading on the charts just before, you know, going to sleep. But if you're in the UK or wherever you are, if you caught this, it's a good time for you, well done. But yeah, I'm not going to hold up. But and yeah, if you're going to take it to the new higher high, you know, TP would have been hit, would have been a nice clean trade. Let me go to the 1 minute. I want to show you why I take certain candles on my entry. Because if you did, I'm just going to do that. Say you took it from here, which a lot of people would, but you wouldn't have been tagged, you know, you're going to get missed. And the reason, so the whole range, you know, is the when demand is created, is the down movement before then we, you know, and get this bullish price action. So the demand zone range is here. However, I refine that down to the last candle wick that takes liquidity. That's how I'll have a different candle. It's always on the edge I like to be, and where we take the last point of liquidity is the most important for me. Again, this is the whole down move is demand. I just refine it to the candle and wick that takes the lows or the highs, depending on what side of the market we're trading. So we come down, sweep this low. So I'm interested, this is my demand level. You can obviously, some people will take the whole demand range and then trade 50%. So they'll just enter here. You always want to go a couple of pips, not even a couple, like a pip or two off. A lot of time I would be here and not get tagged, I've mentioned before. But yeah, I just refine it to the candle and wick that takes liquidity. But yeah, I hope you enjoyed this video and hope you have a nice weekend, man. I'll catch you in a bit. But let me see what price is. I know. I'm just going to observe again, see what happens. It's Friday, not traded this week. I'll probably just chill Friday, observe price, and see what next week's got. If you're up for the week and you've not traded so far, you know, be mindful that don't chase anything today, Friday. But yeah, catch you in another video, man.